In the securities market or the forex market for that matter, volatility is often associated with big swings in either direction. For example, when a stock or the forex market rises and falls for more than 1% over a sustained period of time, then this is called a volatile market. Now, I know from experience that we cannot make any money here if the markets are not moving. So during our live daily room, we took one particular trade there that had some good volatility and a lot of them didn't. This trade happened on the 12th of August. Let me just show you a little snippet of what happened in that live room.
And then we have the CAD versus the Swiss franc. I would have liked to find prices in that area to go short. This is a nice area to try to go for a short there. You're sitting on your 36. You are an extension beyond the mean there as well. So if you go down to the 15-minute on this one, so this area here could be your manipulation and even to try going short right now. This year could also be a 78.6. That's the high. Yeah, that's a 78.6. So this could be your sort of entry here with stops all the way on the tops there in that area. Let's have a look here. If we go to auto trading, so we can just try this one as it is like that as well. Right. Yeah, the stop could be a bit better than that, but let's see what happens to that one. Okay, next we have the Aussie versus the CAD.
So as the week progressed, what we saw was, or the reason we took the trade was because there was this trend line and all of that. And then on our trigger chart is a nice little setup that happened in and around this area. And then prices went down, not by a lot here because of lack of volatility. Prices moved down to about 30 odd pips. Thing is, we are looking for much more. What happened in the for the rest of the trades this week? Sorry for the noise outside. The gardener is doing some housing. Okay, so here on the euro versus the dollar on our 4-hourly, let me show you this one. The red line here denotes the week beginning. Yeah, so the week begins in this area over here. Let's just highlight that there. Prices comes down, goes up, comes down, goes up, and then when prices comes back down in the exact same area, there was a nice little setup there, another small one, again because of lack of volatility. The members would know what sort of a setup this is, but look at the amount that we're getting here. Again, only about 30 odd pips. So for me, it's a lack of volatility in that pair. Yeah, so nothing to get out of it really. And then on the CAD here, on the cable, this denotes the beginning of the week. Prices opens here, and it goes up, it goes down, goes up, it goes down, and then at the end of the week we are just, we are at exactly the same point as we were when we started the week over here. So lack of volatility. Who makes money in this area? Yeah, scalpers are going to make money in this area, but you're going to need to have like the balls of steels to scalp against the EAs of the bank. So I prefer looking at the bigger moves such as this. Let's see if there was an example of any big moves this week. We had, this one was a volatile one, the gopher, the dollar versus the yen. So prices starts out here in the beginning of the week, and then we get some volatility. We get highs, we get prices coming down and prices are making higher highs, and then the lows are higher than the previous lows all the time. So that is what we are looking for before getting into the market here. And this one is an example of a trade that we've taken again in the daily room. That was like more than 100 pips. So that is the volatility that we are looking for, at least more than 100 pips. So now prices comes back down to a trend line. Now probably for next week, if there is a setup in this area, we will try to go long there. We will be stopped here, or a possible stop here with a trend line coming from our daily chart here. So we will have to watch out in that area for next week. Then what we have here is the loonie. Again, a volatile pair. Yeah, prices are opening here in the week. It opens on the 11th or the 10th of August. Here on Monday it opens there, and then what we get is prices going low and going up, making this higher. The high is actually lower than the previous one, so it denotes a trend. So prices in this case are going about, again, another 100 and odd pips. But what I'm trying to say here is that the price, where prices are opening, yeah, it's moving away from that. Moves away from it during the middle or at the beginning of the week, comes back to that same area again. Then we are looking in that area for a manipulation and then a short. So that one is again another 100 and odd pips there. Now have a look at this one. No volatility. An example again. Prices opens here. It goes up against the main direction, so we're not really looking for longs in that area. We're looking to go short. So what's happening here? Prices goes up, goes down, comes back up in the middle of the week to the same area where prices is opened. So in that area we are looking again for, again to go with the main direction, which in this case is a short. So that's again a few pips there, like 30 odd pips from the manipulation down. You're getting another 30 odd pips there. So nothing to write home about. Then we have the Aussie dollar. And this one we've actually taken a little bit more advanced, sort of a risky trades here in this area. So prices are opening here. And then because we are looking really to go long, which is alongside the trend here. So prices opens in this area here. That denotes the week. The opening of the week comes down, it goes back up. Not interested in that short. There was a setup, but we didn't take it. We were interested in longs. We take that advanced manipulation there. I won't show you that one right now. Price goes up, down, but just hovering in and around the same area. Lack of volatility, only making money if you are scalping in that area. Yeah, so nothing going on there. Let me just show you the entry of the last one. You can see here we have a stop hunt in this area. Prices are going long. Guys are putting the stops all underneath this area. Comes down, takes the stops out, and then forms a follow through there. This is our retracement traders coming in. And then after all that action, we are entering the trade in this area and then trying to get long. And only one of our positions was really taken there as a profit, and then it's coming against us again due to lack of volatility. And then the last pair here that we will talk about is the New Zealand dollar. This is again an example of a volatile trend or volatile market. So this is where prices are opening up during the week at the beginning of the week. Right there we can see it. This is the candle that starts all the action. Prices comes down and then goes back up into that same area. And then as soon as that happens for us in the week, we are looking in this area for a manipulation to try and go short. And then the more risky of us are going to take another go at this one when prices proves to be volatile again, which means it's making the lower lows there and prices are making the higher lows here, and then back up in that area. This here is where we are looking for another manipulation to go down. And then all we do is follow that all the way down to the trend line here. That's what we will do next week. So if prices comes down, let me show you the trend line here. You see the trend line is coming from the higher time frame, so this is a trend here. So we would again look at trying to go long in that area. So we are actually going against the main trend here, which is a little bit more of an advanced sort of a method there. Guys, that is what I'll be doing for next week, and I hope everything worked out for you guys as well. Don't forget, the most important thing is to trade safely and prosper.